Hey there, welcome to the channel. So today is Friday, May 27th, and just want to take a look at what kind of happened in the market this week. Okay, so looking at the SPY, we had a pretty decent week here. We've had some recovery. So now looking at the industrials, pardon me, we'll look at that first. You can see that we had this, pullback, and we came right back up to the important moving averages here, which is like the 10-week, which is the 50-day moving average. And then we had failed and gone back down. But what you have is you have a pivot here, right? Okay, so you have a low, lower low, and then a higher low. And then also on the upside, you've broken above some recent highs in the week. So for the last couple of weeks. So, you have a pivot now, pivot to the upside here. So at least for now, that kind of looks a little bit more positive there. Now, and the volume was right at about the average line looking at that. So it wasn't really strong up volume or anything. You notice that what you would notice, though, just, kind of be aware that, during this sell-off, a lot of these last few bars for the weekly volume are above average. So there was, heavier selling. And this would imply, since it's at the average, it's not super low. It's not like over here where it's really low volume, but it is, it's not heavy accumulation. Now up here, this would be maybe more of a heavy accumulation down in this area here. So we're not really seeing that at this point. That's what we have. And let's go look at the SPY really quick here too. And we see same kind of thing here, and looking at the Qs, same kind of thing, except, the Qs are more extended to the downside. And if we look at RK, really didn't do very much. So what I want to do is just talk about, because I was watching Meet Kevin, and it sounds like he's back in again on a lot of stuff, and he's done a lot of buying. And I think that we have to be really careful here. This is a bear market, and we're still heading into the bear market. The Fed is still raising rates. They're not done raising rates yet. We still have high inflation, so they got to bring that up a little bit more. They got to get something out of it. So here's one of the big problems that we have in the market. The issue is that we have to be patient. And the thing is, we're not done. This is most likely, there's no way this is the bottom. It is very, very unlikely this is the bottom. I mean, this thing would have to work its way all the way back up and then start breaking out of this thing. And a couple things to note, even if this was going to be very bullish weeks, you're talking about at least 4 weeks before you can even make it, even at decent turns. You're talking about 3 to 4 weeks where you could even make it to here to even try to get a breakout. So what I'm trying to say is we have to be patient. This trying to pick the lows is a very dangerous thing. This is going to take a long time. We are in a situation where the Fed has not done this for a very long time. They have not gone out there and raised rates to this degree in quite a long time. And therefore, and thusly, this is going to be a long process. It's going to take more time to play out. Now, if you look at the SPY, how is, how much longer is it going to take? Well, as I've said before, we have to put a base in. And here's the thing. When we look and we take a look at the big picture, we can see that this is really what's dangerous here. There's this saying that, generals are always fighting the last war. And what happened here is different than what is happening now. Okay. So in this particular case, when they shut down for the cerveza sickness, it was a very, very sharp, quick pull out of the bottom. And as a result of doing that, the market came up and made new highs relatively quickly. And so my point is that if you're trying to buy and trying to pick where this thing is going to pivot and turn around to start the next bull run, and you're looking at this, I really believe that this is the wrong thing to be looking at. First, a couple of things to note here. First of all, the Fed wasn't cranking rates at this point. And secondly, they were responding to the cerveza sickness. In other words, they came out and they cranked rates back to zero. Now, they had tried to raise them up earlier, but they got the rates to zero. And the government and everyone came out and just created and printed an immense amount of money. They just cranked the money supply, and you can look at the MT money supply. You saw that they very quickly increased the money supply by 25%. And inflation was low at this time. We did not have 8% inflation. Over here, it's an entirely different situation. So what are the comparisons? Over here, we have 8% plus inflation. We have the Fed raising rates. Okay, so the Fed's going up on rates, and they're being actually very hawkish. They're being very hawkish about they're going to increase a few more 50 basis points at least. So they're being very hawkish. So that means they are not supporting the market. In addition, as we had seen, they're going to be cranking off, they're going to be liquidating mortgage-backed securities and treasuries at a rate of nearly, they're going to get that rate up to nearly 100 billion a month. And as I showed you in one of my previous videos, I mean, that could still take 5 years to bring that down to some kind of a reasonable level. But my point is that that's the environment you're in. Here, what happened here? Back here, the Fed cranked rates to the floor. So the Fed was dovish. They crank rates to the floor. Here, the government is not doing spending. Government is not coming out with more stimulus checks. They're not cranking out and printing money. Here, the government came out with incredible amount of stimulus, and they were cranking it. So the point that I'm trying to make is, if I'm trying to figure out where we go to from here, this over here, this cerveza sickness thing over here in yellow, this was not the place to look. So it's very important that this is not the same environment. So therefore, trying to pick these sharp bottoms on a weekly chart, it is very, very unlikely. It is very unlikely that we're going to see this huge immediate rebound. Okay. That's just, we're in an entirely different environment. So now if I say, okay, what is it going to take to find that bottom, right? And I know that I'm being kind of on the bearish side here. And one of the things that I'm going to start working on is actually trying to look and find, like, hey, what companies are going to come through this thing? Who's set up to come through the recession that we're in? Who's set to come through this strong? And then when those stocks come down, you know, who are the ones that are going to look at that got a chance of surviving, where we can buy? And I'm going to start looking at that. I'll be looking at this weekend. But if we look here, I think we have to look to other bottoms. So we're over here. Look at, we're like right here, right? So I don't know if you can see that very well, but we're like right here. We just, in this area, we've just rolled over, right? Let me do it in red. We're kind of like right here in this area here. We've kind of just rolled over and come out. And if you look, if we go back to this period of time, the 2000 tech crash, you had another 2 years before you started the new bull market, right? So see, it takes a long time. We are at the early phases. We're like in the time frame, we're maybe right here. We're maybe at this time here. And for us to really put in and start coming out, we at least have 1.5 to 2 years to go before we have the new bull market. And all the buying here, look at all these people that bought here, came up, they gave it all back and put in new lows and gave it back. Here we have even another double top that we broke down. It was only when you start getting down to here in 02, 03, we actually start putting in multiple lows where you don't go lower, and here's your higher low, and you're still not breaking out in the up, but you're getting that higher low, and it's taking like a year. It's a huge base. That's when you get kind of set up. That's when you get set up for a recovery. Now let's go to the 08, 07. If we look at that one over here, once again, where are we? I mean, we're either, you know, it's not exactly either at this point, maybe we're probably at maybe this point, or maybe we're at this point. You know, maybe we have a huge rally up to this. See how this one faked you out right at this point here? This is like a huge rally up into the moving averages, and then it just failed and fell away. So, you know, that's one of the things that we could have. And if we look at it, you know, we're either here or here. This one was quicker. You know, we had this hammer down low here. But once again, coming from there to that low, you're still talking, you're still talking about 6 months of time. You're still talking significant amounts of time. And this was, this was the kind of case, once again, where boom, they hammered it out to the low and the Fed came in. And what happened now? The Fed came in, cut interest rates to zero. And in this stuff, they had the TARP, they had the bailouts, they had all this stuff. So in many ways, this financial crisis response at some point was more similar to what we see in the cerveza sickness. And hence we get this launch out of the bottom. So what I'm trying to say is that it's going to take more time and we have to be patient. And that's the one thing I caution you on. So I'm not giving you financial advice. I'm giving you my perspective on the situation. I mean, I'm going back 20, 30 years, going back to previous bull and bear markets to try to get a perspective on what situation we're in, how it compares to those, what it took to put in a base and to get to a position where the market was returning to an uptrend. And my point is that it takes a lot more time than you would otherwise think that it would. And so that is the caution to you. So if I look here and I look at this guy, you kind of have a neckline here. You had kind of a head and shoulder top here. And it actually had this cool thing where the right shoulder kind of, well, no, it actually went up a little higher, but we've broken down. So now the question is, okay, so, what is the next setup on this? Well, the setup is right here. Now I could draw this different ways. I mean, it could have a slanted whatever, but the point is that there's resistance. We're coming up into this resistance, and that's where you're going to get that resistance. We're basically coming into there right now in this range. Now it can go through resistance. Resistance is not like a solid brick wall, right? Resistance is like, it's like a creaky roof or a creaky floor that you're trying to bust through that's kind of half rotten and stuff. It can knock you off, but you can get through them, right? But it takes time to get through them. And so that's what the caution really is right now, because you're sitting over here, we're coming up very quickly into resistance. You have super resistance right here, right? That's going to be your really big resistance, but you're in a whole resistance zone. You have an area here where anyone that was doing any buying, any stuff like that, they may be looking to get out. They may be like, okay, look, this thing went lower. I was like, I now have got myself in a position where like, oh, I am back to even or close to even. And this is why it takes so long for these things to play out. It takes so long because you have all these people that like, oh, they thought they got the low and then they're down over here and they're getting hammered and they're like, okay, well then they wait and blah, blah, blah. And then they try to sell. And so you have all, each one of these downdrafts, you have a bunch of new buyers that bought at the wrong time, tried to pick a bottom and they're screwed and they're just waiting for it to come up and they start selling it. And that's why you see these rallies that pop up and then they just sell off. You get a little bit, it looks like it wants to go, and then there's a sell off. And because once again, you're in that bear market, good news is bad news. Bad news is bad news. That's where you're at. When you're in a really good bull market, what is it like? Hey, good news is good news. Bad news is also good news, right? That's not what we're in right now. That's not how it's working out. So summary, urge patience. Don't just run in there. Now is the time, I think, to be patient. That's it for this one. Bye.